Okay, good morning everyone. We're going to get right into the stock market. In this video, I'm going to cover general market analysis. We're going to look at some of these short trade ideas that are starting to work out, and we'll wrap up there. I did a gold mining video yesterday. That's primarily the sector that I'm bullish on, is the gold mining stocks, as well as KHC still looks good. So we'll go through that. Starting out here with the triple Qs, you can see I talked about this on Friday, how I was entering a short trade on Friday because we broke that near-term support right there at 378.88. You can see there's your breakdown candle on this hourly chart. We back tested it once, and even today, this morning, they kind of got close to back testing it again, but sellers continue to step in and smash that thing down. So I think at this point, we are going to go lower. Again, the negative divergences forecasted the fact that we were likely going to sell off. Here on the hourly chart, you can see how we started to downtrend there on the momentum, on the RSI and the PPO, while continuing to make higher highs there and there. We had a bearish rising wedge and we broke, but we just drifted sideways. So ultimately what I was looking for was a break of this support line, 378.88. We got it. There's your breakdown candle right there. So I think down we go. How far do we go? Well, let's look at the daily for that. I've got some support here at 369. It's about 369.64. So I think that's the near-term target right there. It looks like we're heading down there, and that's about percentage terms, about 1.5% or so more to go to the downside. We're likely going to get a reaction there. That's the first level of major support where the dip buyers are going to be sitting at. So we'll probably get a reaction or a bounce there. Ultimately, I do think we break that, and we also have some support. We've got different levels to kind of key off of. We've got another level of support at 354.67, and we've got support here at 342.42 or 44 or so right there. So I see that as kind of a key level. So those are some levels to watch, and that's going to be, if we get down to here, that's a drop of about, let's measure that out. Yeah, about 9-10%. So that would be on par with just a market correction. If we're going to get more than that, well, we'll see. We also have the 200-day. You can see the 200-day kind of moving up. So I suspect we're probably going to come in and tag that 200-day. We have not touched the 200-day moving average really since going all the way back here in April of 2020. That's the last time we were really trading around the 200-day moving average. So I think if we're going to get some sort of an actual correction, not just these little 2-3% pullbacks, we're probably going to, at a minimum, hit that 200-day moving average. It looks like it's going to fall in that area right there. So I like the short so far. It's working. It's profitable. Here's the SPY, looking at the hourly chart here. Again, SPY had the same pattern, bearish rising wedge on this hourly chart. Negative divergence was building. So you see the momentum starting to slope downward here while price continued to make higher highs. And then we broke. And again, same thing. We created this sideways drift just for a couple days, and then we got a breakdown candle. That breakdown really came right here. They recovered it, but it was instantly rejected. So you could say your breakdown was right about there. So at that moment in time, we had SPY broke down first, then the Qs went, and that was the time to, I think, to establish a short, because both of the major indices no longer had support. It looks like they're downtrending. So where does the SPY go? Well, in the short term, right there, I think we've got some support, which was former resistance right there at about 441.76. And also down here, this is pretty good support down here at 436.15. The 200-day moving average is way down here. So we also have this trend line marked in red. If I show you on the weekly chart where that comes from, that's going all the way back to your 2009 lows. And this is your complete bear or bull market here in the SPY on the weekly chart. Held support here, 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 here. We finally broke, and we've been trading underneath it since 2018. The Fed was able to pump it back up, but you can see we've barely been coasting above that trend line. So I think a tag of that trend line, possibly a breakdown, but at a minimum, maybe a tag of that trend line makes a lot of sense. So from where we're at now, that would be a potential drop of 2 to 3% down. And if we break that trend line, a tag of the 200, that's going to be pretty bearish if we actually break the trend line. We'll get into that later if that happens, but if it does, then that means this was a false breakout and we're heading lower. So obviously I don't think it's gonna crash like that. I think it'll work its way lower over time, but things to watch for. So it seems like we've started a correction. We're continuing to move lower. The sellers keep stepping in at resistance. Okay, a follow up on the short trades. Here's Nike. You can see we got the sell signal on Nike right there. That was your breakdown of trendline support. We were looking for it in advance because we had negative divergences that were building on the RSI and the PPO while we were continuing to trend higher. So I marked out those. I have those divergent highs circled. So we were looking for the break of trendline support. There it is right there. And down, it's been going down ever since with bounces along the way, but downtrending. So at this point in time, my targets are here, 146.09, and potentially a gap fill down here at 134.86. So those are the key levels of support. We're up, about halfway, almost halfway to the first level already. So continuing to work. I think the selling is going to continue on our way to lower. Here's one to watch. This is not a trade. It's a trade setup, but I want to point it out in case it triggers. So here's NET, which is Cloudflare. NET is the stock symbol. You can see we've been uptrending here on the daily chart, but we continue to build negative divergence. And that's not really been negated. That's just this big, long negative divergence that's been building for all of this time right here. Each new high has been divergent highs, and that's just been extended out. And so you'll see here on the PPO how we're downtrending, RSI is downtrending, and we've got this trend line to watch right here and marked in blue. Looking for a break. Yesterday it looked like it was going to go. You can see it had a stick save where it closed intraday, or intraday it was trading below, but they bought it back up and closed it back below above support, and today we're still holding support. So you need to see that break for the sell signal, that trend line support. A nice impulsive breakdown of that, and that's your sell signal. Targets on this one, well, I would say definitely down here to 95, 95 we'll call it. And the 200 days right in there, you got a confluence of support right in there, kind of a zone of support. So that would be a drop, depending on when we get it, of about 25% or so to that first kind of area of support. So things to watch on that one. Again, not a short trade. I'm not short this yet. I'm waiting. It is just only a setup. And here's EMR. I talked about this one over the last couple weeks, how it looked like it was going to start selling off. And sure enough, you can see on EMR, negative divergence has been building for quite some time. That's not really gone away. We've just extended the negative divergence. And so it's a good sized divergence. We got our initial sell signal right here on the break of this red trendline support, which came off the April 2020 lows, March 2020 lows. Clear sell signal breakdown. And then for months, it basically kept grinding higher, doing some backtest action. But finally, we got another breakdown, and it really came, it came right there. There's your second breakdown of trendline support, and it's been all down, and the selling's been pretty impulsive ever since. So that's where I pointed it out. It looked like an actionable trade right there, and down she goes. You can see it's basically, since that breakdown, it's already down, about 5% or so, but it's basically wiped out the gains that have been had over the last, this is probably about 2 months worth of price action right in here, and it's wiped that out in just a matter of 6 days or so. So that's looking like it wants to continue to sell off. I don't see any real support till we get down to about 93.62, and then the 200 day is going to be right down there as well. So that's likely the first level of support right in there. We're about halfway there, looking for more downside. BlackRock continues to sell off. I've got it circled right there as kind of that final back test, and that one's been all selling as well. This one's had negative divergence. So the short trade originally, here's your March 2020 lows, and there's your daily uptrend line right there. And you got the original sell signal. I've got a lot of things marked out, but basically original sell signal came right here, basically right there, back on June 16th. And then it did a back test. Again, this market loves to do counter trend back tests when things break, because it's such a buy the dip market right now, that when you get a break of trend line support, the dip buyers are there and they ramp it up. So there's a back test, there's another. But again, we've broken the major trend. We have negative divergence, and I can't really make out a clean trend line on this now to the upside. Even if I marked it off here, off the lows, you can see that we're basically, this was kind of your secondary trend, and we've broken that as well. So as far as I can tell, down we go. We've started a downtrend. First level of support, 840.50, and then next level of support on this one, about 790.80. And I've got a third potential target all the way down here at 670, it's about 670 or so. Here's one, AMG. This one's just really, if you look at it bigger picture, it's just been drifting sideways with a slight lean to up, but basically sideways price action. Now this one has negative divergence, big clean negative divergence. So this was your last divergent high right here, and your trend line that you were waiting to break was really coming off of this time frame of September. Clean up trend line here. We got the sell signal, the big impulsive breakdown candle right there. See it in red? That's your sell signal, or the indication that the trend is likely reversed. But again, just like this market loves to do, it's created a couple back tests where you rallied up, it fails, rallied up. So it's really thrashing around, it's moving, it's going nowhere. It's just grinding, it's chopping up and down. So this is indecision pattern. I think it's a topping pattern ultimately on this one. Looks like we're heading lower. First level of support, 148.83. Next level of support down here at 135.29. If we break this 135, about 135 we'll call it, we've got a thin zone right here. So this big breakup candle right here, you break back into that range, you're likely going to just drop pretty quickly right to the bottom of the range at about 118. We'll call it 118.50. So that's really my final target for this trade, is about 118.50 right there. And we'll wrap up with gold. I know I've been covering a lot of gold and gold mining stocks recently, but that's just because I see it in general as a bullish sector, that a lot of these stocks look really bullish. So I want to make sure that everyone is on point for what may be the next leg higher in this long opportunity. So these are all long trades, these gold mining stocks. Here's gold bullion, and that's really all I'm going to cover today. But you can see basically this key level of 1790. That's a really key level. I just want to point it out again on the weekly chart. This was your former resistance back in 2011 and 2012, kind of your former high, with a brief overshoot, but basically tagged it once, twice, three times. That's all she wrote, and went into a big bear market. Well, as I zoom in, you can see that's the key level. We're trading above it. We're holding that on the weekly chart, and still looking bullish in general. Going to the daily, you can see we have this uptrend line coming off of 2019 where we held support here. There's your COVID drop. We stopped short there. Held support here, and brief undercut, but this was recovered on the weekly chart. I've pointed it out in the videos. So this was a bear trap, this brief drop and then recovery. And you can see what's going on today. Holding that and kind of ramping higher. We still have the 200-day moving average. It's sitting there at about, 1807.96. So you got to break above that. But once we start breaking above that, definitively, it looks like we're going to start off to the races for that next leg higher. So that's what I think is going to happen. No guarantees, but in general, the miners look good. The miners are, here's HMY. You can see breaking higher today. A lot of these miners, they're just starting to take off, but just not quite there yet. A little more work to do on these to say that, yes, we are, rallying higher and we're in a bull trend. So some are starting to kind of pop, some are starting to kind of grind higher. Nothing's impulsive yet. And that's really it, everyone. I just want to let you guys know, thank you for being a subscriber. Leave me a thumbs up, guys. Leave me a comment below. And if you're new and you want to learn about technical analysis and how to find these trades, how to manage your trades, how to have patience within trades, again, I'm not looking for winners every single day. I'm looking for winners over the trend, right? So it's swing trading. Yeah, some days stocks go against your trend, but in general, we're looking to capture the big trend, and that's the goal here. So check out the course, link in the description below. That teaches all those skill sets. Okay, guys, thanks. Catch you on the next one. Bye.